I think the industry is in good health. I think the industry is cautiously optimistic. I think liquidity, generally real estate from an operation level, is doing very well. But I think liquidity has always been a little bit of an issue over the last year or so. And I think that will improve very much over 2025. And I think it's in good shape.
I think the obvious answer, and one of probably the most prevalent, is the interest rates and how that's impacting our economic environment and how much transaction activity we're seeing as a result. There's been such an enormous pressure on the market in the past, and we've really seen that market dip down. But I think as we've seen rate cuts drop in the last couple of months, that activity is really picking up. And sort of that definitely changes the economic outlook for especially the industry and the market as a whole. Over the next year, I think we're going to see transaction activity pick up and hopefully more of a focus on continued investment in all sort of sectors as well. So hopefully we'll see more positive change to come.
Well, there's a lot of political instability that is foreseen in the next 12 months, or maybe not, but we'll see. So what I heard a lot during the conference is we'll see. So it's a bit early to tell. Other than that, there's also the other more long-term trends that we keep watching for: demographic change and climate change, and the topics that we have to pay attention to the next year and beyond.
Macro factors always influence us. So what's going on in the States with Trump and tariffs, whether the conflict in the Middle East gets resolved, whether Russia keeps going, those are all things on the periphery that influence the things that influence our industry in terms of interest rates and, immigration and stuff like that. I think the industry's been not on the sidelines, but very buttoned down for the last couple of years. That's created a pent-up demand of capital to be deployed. So I think if we see some stability in those things I talked about first, we'll see an increased transaction volume this year based on those factors that people have to spend money and allocate capital.
Across the next 12 months, I think the most obvious thing is the changing politics both in the US and potentially in Canada, which will shape our industry. I think that when you take some of the information we learned in sessions like AI and how AI is being used to change the efficiency of buildings and change the user experience, that's going to change the industry, and it's going to change it quickly when people start to talk about it and do things regularly with it. And so having a conversation at the forum around that is a great beginning point for some and a journey continuing for others, but it's going to make a difference.
I think real estate industry going through massive transformation from the technology perspective, from sustainability practice. So I think that every aspect of real estate operation going to evolve over the next couple of years, from underwriting to asset management to lending to property management, asset management. I think collectively we have to look at sustainable real estate operation in a completely new fashion. And that requires everybody works together collectively to make it a reality.
Well, I feel like from conversations we've been having with our clients that everyone's been in this survive till 25 mode. And so I think there's a lot of political shifts, a lot of economic shifts that will happen some are already happening, but there will be more that will come. There will be new regulations specific to ESG that are coming down, new disclosure frameworks that many owners and investors will be subject to. And so I see quite a bit of momentum and acceleration for those who have been in the commercial real estate space making progress on the ESG front. I think we'll start to see them pick momentum back up and start moving forward. And I think that we'll start to see those who haven't started yet really starting to shift into this preparedness mode and starting to understand what are the risks of doing nothing and what is the value potential of doing something.
I have an interesting perspective because I'm on the outside looking in. I meet with a variety of developers on a weekly basis, get lots of opinions, and there's no shortage of opinions right now. The result of that, in my opinion, is it's an industry that's had the luxury of status quo for a decade. You really could do no wrong in this industry, which is great, but that doesn't really breed innovation. The industry is now facing tough times, and it's forcing everyone to relook at how they go to market, how they build buildings, how they design, how do they maximize their ROI, how do they get their performance to work. So I think, fortunately, for a lot of developers who survive this downturn, they'll come out the other end far more progressive, far more innovative, and probably far better at what they do moving into the future.
So I think the industry largely over the next 12 months is going to be shaped by political developments primarily. So what I mean by that is we expect to see potential changing governments at the federal level, changing governments across different municipalities in Canada as well. So how will that shape legislation and bylaws and different things that the real estate community needs and looks toward in order to get projects done? I also think that the Bank of Canada and what they will ultimately do with further interest rate cuts, I think is going to have a big impact on what we see across the development spectrum and the real estate industry in general over the course of 2025.
I think it's opportunistic at this point. For organizations and firms like Tres Capital that I work with, we have had a continuation of our ability to perform and deliver results for investors and borrowers. And we do see those opportunities, those green shoots in the marketplace. But we're hoping that all the peers and competitors will come together to help move policies that are preventing the investments that need to occur in the industry to continue to better the communities that we build and invest in.
I think you're going to see more liquidity, and more liquidity leads to more activity. So I think activity is going to be increasing next year under the assumption that the bond market stabilizes a little bit and becomes less volatile.
I think what will shape the industry is what happens with capital flows. So I believe it was Benjamin Tall showed that there's $370 billion in GICs that had higher returns over the last couple of years. All that money, as the GIC return goes down, may come back into real estate. So more capital, which should allow us to invest more, including in housing. So that I think is going to shape that. And then a lot of that is connected to what the 10-year Treasury is doing. So that I think is what's going to shape it is capital flows and investment dollars.